Volume number 5 of the daily FX breakdown, now edging towards the end of this week with the ECB news that I mentioned yesterday we were going to review during today's volume. So up on the charts I brought up the main pairs where the euro is involved. So we have the euro Aussie, Australian dollar, euro Swissy, Swiss franc, euro yen, Japanese yen, and euro dollar, American dollar. So as you can see from this picture, we can see a lot of bearish momentum to the downside on the back of the news that broke regarding the ECB slowing the crisis stimulus in shift. So Lagarde says it's not tapering. So a lot of people were waiting for that buzzword to be utilized, in my opinion, because there is a lot of anticipation, a lot of interest from market participants to see whether or not central banks will react and how hawkishly, so how promptly and decisively will they react in order to slow down the support through QE programs such as the purchase of bonds and mortgage-backed securities. So as you can see from this news from Bloomberg, the ECB will slow the pace of its pandemic bond buy-in in the final quarter of 2021. So at this point, a lot of people are thinking that this would mean tapering, a coming to an end of the QE program, or the quantitative easing. However, she quoted the sentence, "The lady isn't tapering," almost sort of denying this action from the ECB. So describing the ECB decision on Thursday as it's more of a recalibration of the pandemic emergency purchase program for the next 3 months. So at the end of 3 months, this will be reviewed. So it has been then moved onto 80 billion euros of monthly acquisitions. And she justified the decision by saying the Euros region is increasingly advanced, so the rebound can be maintained with less monetary help. All in all, this, in my opinion at least, is positive news. We are seeing from the macro data some positive numbers of what seems to be somewhat of a recovery, albeit slow somewhat, but we are potentially and gradually getting out of the crisis. The same piece of news from a different provider then utilizes some bullet points to really sum up what has been decided, and she was asked whether this is actually going to be tapering that we are talking about, and she was more of a recalibrating. So like I've said, the word taper is, in my opinion, utilized with a lot of caution, because a lot of people are monitoring how the banks are responding and therefore want to act very promptly upon any mentioning of tapering, like the Fed in the past. So the stimulus has actually been recalibrating, like we've just said, and this is just a graph for a visual representation. But if we look at the charts, as you can see here, I've noted, let's take a look at one at a time. So perhaps the market participants were expecting more of a hawkish tone, so more of a firm tone of decision making, and therefore they were probably somewhat disappointed from seeing the fact that this is not actually tapering, is somewhat of a mild procedure. Okay, so the euro's reaction was actually quite negative and very strongly to the downside, I would also say, because it then also went on to violate some structural levels that in normal market conditions would have at least seen some reaction off of up here or down there rather. So as you can see from the 4-hourly on this pair, that does represent a clear 4-hourly demand zone that then pushed price very much to the upside by breaking such levels around here. So we have a break of structure over there. So that zone was then very important, but it was violated. It was not holding very much in order to then reinforce the fact that the euro was on the sell side for the day's price action. Equally, on the Euro Aussie front, Okay, I was expecting a reaction off of that level to respect this somewhat of a uptrend or ascending channel, but we broke through it, rested off of that 50% zone of this area that we're now trading within, and then pushed higher. When it then comes to Euro JPY, it's quite a nice setup in my opinion, because we're now looking at, yes, somewhat of a bearish reaction, but now sitting at a key value area like we've seen in the previous couple pairs that then propelled price higher, and we're now trying to revisit it in order to clear off of those imbalances that price formed around such area. Okay, but we shall see how that responds. If we drop down lower onto a smaller time frame, we can see some reaction is obtained off of the 50% zone down there. So we shall see. Okay, it might be a nice trade opportunity in order to continue this bullish momentum. Moving on to euro dollar, this is also a nice pair, obviously one of the most traded and most common pairs as well. So there's a lot of liquidity being pumped into this asset or this pair. So so this morning I identified a range from point A to point B, now sitting at the fib level, fib retracement down there, and just as a visual representation I was focusing on the formation of higher highs and higher lows. Well, these are just higher lows, but the point being that we might be engaging in somewhat of an uptrend. Very much a picture with a lot of noise, a lot of reaction, which is obviously to be expected when such big news is released. The initial impulsive leg to the downside, but because of the importance of such level at the 118 spot 1, 118.09, 118.1, roughly speaking, in my opinion, that just signifies ever so slightly that we are now rejecting off of that zone with a huge wick. So 2 4-hourly candles rejecting off of there, and we're now pushing to the upside to potentially move to the to high levels. So all in all, it's this news, the fact that the euro will still be somewhat backed by the ECB, can be good news because the economy is then supported. But obviously, market participants were also waiting for a reduction in such operation QE measures, because the more there is of something, that the lower the value of the asset itself. So if they try and reduce the, or rather, if they keep pumping too much liquidity into the market, the euro might just keep pushing lower and lower, maybe with such behavior. And therefore it's probably not too healthy for an economy in general, but for a coin or a currency to just be inundated with liquidity and quantitative easing. So we shall see. It's interesting times. Potentially there is the scope for the upside, but we shall see in the next few days and next week what the subsequent picture will look like in the markets. So just wanted to take a second to thank you all very much for following me through this week of a short series. I hope you've found some value from it. As you can see, the world of the markets is very volatile, very difficult to predict, very interesting at the same time, however. So I hope I've shared some curiosity and installed some interest, why not, in this complex yet wonderful world. Okay, thank you very much and see you all soon.